Hey, Mike.
Hey, Rob.
Chelsea is helping some onboarding, so I'll be here to watch your chat for you.
Okay. I mean, you don't need to, just as long as you make me a co-host and I can share the screen.
Okay. Yeah, you're co-host. I'll stay on, make sure everything works first.
Okay. How's your day going?
Good. It's been busy. Actually, I liked our team meeting this morning. It was good. Lane got some good. I mean, there was a lot of good content today, so I was really happy about that. And I think people were really impressed with all the features of the mobile app.
You know what? It seems like they did it a little bit different this time. They got rid of the problems before they introduced it.
Yeah, I'm glad they did. Yeah, and I like that they made it very easy, point and click, not super complicated, so agents are just like perfect, so it should be good.
Cool.
So have you noticed as you've taught these classes that you've changed the content a little bit, or has it pretty much stayed the same, do you think?
Each class I do is different based on questions asked.
Yeah. Good point.
So, it's, it just changes.
Yeah.
But the content is, I mean, I think I could do it quicker. I mean, some of these guys do the whole contract in a 2-hour class, and
Wow.
I don't know how you can do that, but I mean, I thought Vicky went pretty quick, and that was 3 hours.
Yeah. Especially being that it's like people just have to see it, and it's the first time they've seen it that way. It just takes time to comprehend.
How many people do you think in our offices have just seen it for the first time today? I mean, do you think that most of them have taken one of the classes, either the Vicky's class or my class, or?
I hope so. I mean, it seems like people have been pretty adamant about getting on your classes. So that's why I wanted to mention the recording, because that's what I did when I was in Arizona, was I watched your class, and I learned a lot. There's a lot of good content and made me really understand the flow of the contract. So I'm hoping a lot more people do it.
That'd be cool.
Yeah.
All right. Yeah, I mean, we got some time. I'm gonna finish up a loose end.
Okay.
Hi, Andy. How you doing?
I'm doing well. How are you?
Great. Mary,
Good.
nice seeing you. Or
Oh, I was just messing around my computer until we get started, just checking my email.
Go right ahead.
All right. I'm here on audio though.
Perfect.
How you been doing?
It's my biggest problem is the rain knocked out my my front lawn Christmas decorations. So shorted out some. So I'm kind of half dark.
That's
But we'll
okay.
tackle that later on.
Yeah.
How you guys doing over the hill?
Not bad. Actually, the sun poked through for a little bit earlier. Looks like it's about to start raining again here probably in a little bit.
Yeah, it's sunny outside right now. We'll see how it goes.
Oh yeah. Oh, that's nice.
I got 1 o'clock, so let's get started, okay? Good afternoon, everyone. Can you guys hear me?
I can hear you, Mike.
Perfect, good. All right, so, I recognize the names that are on this, that have attended other classes, which is great to duplicate it. And I was talking to Rob earlier that no contracts class is the same because it varies with the questions that are asked.
Yeah,
And so hopefully you'll be able to, if you've been to the class before, you'll be able to pick up some added tidbits on this. But today's a day, kind of more than coincidence that we have the class today on the new RPA, since
Yeah.
it was since it's now on zip forms, and I checked at 7 a.m. and it was on. So it's live. Has anyone gone on and used it yet?
no.
Okay, all right. So
Mike,
So-
someone did, I got a call from someone and I guess there's already a mistake on it.
Oh, God.
oh, really?
Yeah,
Do you recall what it is?
yeah, in paragraph, the common interest, page 2, L6, where it says common interest. On the copy I have, it refers to paragraph 8F and 11K. They said on the new one that it refers to 11F.
Okay, all right. Well, I
And-
mean, it's not going to be detrimental in
No, no.
writing up the offer. So,
But no, it's not.
okay. All right. So let's get started. We'll probably, even though I think it says 1 to 4, we'll be probably done closer to 3:15 today, and we'll do part 2 tomorrow. But I wanted to kind of go over a few things before we roll up the sleeves and get started on this. But does anyone have any specific thing that they want covered other than just the general review of this new real estate purchase agreement?
Are you gonna go through the TOPA?
I wasn't gonna go through it, but I was gonna talk about it.
Okay, because Mike, yeah, okay.
Yeah.
Hey, Mike, do
we'll
you
go
have
through
a copy or a link we can get a copy of the RPA to print out to follow along?
Yeah, let me see what, you know what? Rob, are you still on?
Andy, if you were to sign on to CAR
Yeah,
and go to the contracts,
No, you know what?
it should be there.
How about this one? Renee, can you do me a favor and
Sure.
I'll email it to you
Sure. And I'll email it to Andy.
and
Thank you.
whoever else wants to,
Who else wants it that I've got their email?
Renee,
Okay.
do you have my email? Actually, could you put the link in the, Mike, are you attaching it to the email?
I'm just
Yeah.
gonna put it on the, I'm gonna email it to Renee.
Okay, good. All
Can
Can
right.
you
could
put it
do-
in the chat? Can you put it on the chat?
You're asking for a lot from me.
Actually, Mike, if you send it to me, I can put it on the chat. Okay, just send it to me also when you're sending it to Renee.
Okay,
Andy, I'll just send it to you, okay?
thank you.
all right, good. All right, well, you know what? Let's get started. Is there any specific things that you want me to cover other than just our normal review of this contract? Okay, let me start off by saying that I was on a mediation yesterday, and our attorney said that he heard a independent broker. What he was doing yesterday was making copies of the old contract from zip forms and making about 30 copies of it. I think he plans on using the old contract. So I don't know how many people are going to be out there, how many people you're going to experience that'll be doing the same thing, but I'm going to tell you that I'd like you to use the current contracts. There's a couple reasons for that. Number one is when CAR changes something, whether it be an addendum or changes a purchase agreement or whatever that they're changing, the reason is that they're trying to change it for the better. Usually it involves some type of legal legal precedent that has to get them to either expand on something, change something, or eliminate something. So not so much that this more so is for legal. I just think it's just a better overall written contract. So I'd like you to use the current contract. Number two is if there is ever any legal action against us regarding the form, say that they are questioning, or someone is questioning the way that the form is written or the contents of the paragraph, we have free legal defense from CAR if we use the current contract. If we use the old purchase agreement, we are on our own. So I really want you, not just for that, just because it's just good practice. Now, here's what I would like you to do, especially if you have a listing and you receive a purchase agreement on the old purchase agreement as of yesterday or the day before. It's totally legal and binding if the buyer and seller agree to a purchase agreement, even if it's the old one. But I'd like you, the practice that I'd like you to do is to talk to your seller in advance. Tell them that the purchase agreement has been changed, much for the better for the seller, in my opinion. I'll get to that later. But you need their permission to make sure that you reject the old contract and have the buyer's agent redo it on a new purchase agreement. So any offers that come in today, would be best to have the buyer's agent redo the contract, the old contract on the new contract. You don't have the power to tell the buyer's agent that. The seller, it has to come from the seller. So coach your seller as to why that should be. And that way you have the buy-in from the seller to get the new contract. So you can tell the buyer's agent that that the seller needs to see needs to see it on a new contract. Any questions on that? Okay, we're going to get started on this. So again, as of this morning, I got on at 7 a.m. and I saw the new RPA available to everyone. And I'm going to share the screen right now, and I'm going to get into it.
Mike, can I ask you a quick question?
Yeah, do you guys see the contract?
Yeah, we're seeing the contract. Just a very quick question. I haven't kept up with this, Mike. When do we need to start using this?
Today.
Oh, today. So if I'm writing an offer, then I need to write it on this one today.
Yeah, actually, if you go on Zip Forms, that's the RPA that you'll see.
Cool. All right. So yeah. Okay, good. I have to write an offer later on. So good.
Okay.
Thank you.
Good. Okay. All right. Let's get started on this right now. So you see the first page of the RPA, and we're going to go line by line. I'm going to give you the overview of it first, and then I think that it's basically more of a new format than material, but there are certain aspects in the material that are different. I think it makes sense to do what they did. They expanded it to 16 pages, and by if you add if you print out all the addendums and all the other things associated with that, it could be a half a book. But it's just, I think it's done logically, and I think it'll help us in the long run. So with that being said, let's get into this. first blank that you see is date prepared. That has got no legal significance other than using it as a reference. This is an offer from, this is where you put the buyers in there. If you're using the zip forms, it'll allow 2 buyers' names. You could use another form called the additional signature addendum, where you'd be able to add more buyers to this list if you wanted to. Of course, you could jury rig the zip forms and get more people in there by putting it all on the names for the 2 people. You could squeeze in 3 people if you needed it. But how many buyers do you need on an offer? You got a husband and wife. Do you need both of them?
Just one. If needed.
Whoever's on the loan.
Whoever is on the loan, that's right.
Whoever's buying the property that needs to get the financing. You could always add people and take people out at any time, but you need to have the people that are qualifying for the loan on the offer. Good. Okay, the property acquired this is where you put your address down in the city, in the county, and in the zip code. So also this allows for underneath where we had the assessor's parcel number, we had the assessor's parcel numbers before, but now you could put 2 assessor's parcel numbers on the on this contract. So it's just a little bit of an addition to that. And if you look below that assessor's parcel number, in bold letters, the mailing address and the postal mailing address may be different from the city jurisdiction. It could be in the mailing address could be one town, but the jurisdiction is another town. You see that in some of the cities. The first real estate office of Campbell was San Jose jurisdiction and Campbell address. So it could be confusing, and they decided that it needs to be on the purchase agreement to help the buyer, put the buyer on notice that they should advising them to investigate on that. Paragraph C, basically what it's doing is that the terms are not just on what's paragraph 3, which is the grid, but also on all the pages on that. So there's 16 pages, and the buyer and seller should be looking at all the pages that makes up the contract. And paragraph D is that the buyer and the seller are the parties of the agreement. The brokers and the agents are not parties to the agreement. They're only parties to the escrow and getting paid for that. And the legal reason by not being a party, it helps us as brokers and agents that if someone sues us, then they have to pay for their own attorneys. So if you're a party to the contract, there's a paragraph which talks about the prevailing party in a lawsuit gets their attorney's fees paid for by the losing party. So we're not a party to the contract. Years ago, we were a party to the contract, and luckily we changed it. That's the power of the California Association of Realtors. Since we're the ones that design this, we make sure that it benefits the agents and brokers. Any questions on paragraph 1? Okay. A side note, that assessor's parcel number, the reason there's two numbers now, and we may be seeing it more and more, is with the state law SB 9, where you're able to divide up properties and for affordable housing, we might see multiple APNs more more prevalent on this. Okay,
Mike,
paragraph 2, nothing's really changed in paragraph 2, except it's spelled out a little bit in disclosure in 2A. It talks about that the agency from the seller does not have to be shared to the buyer, and vice versa. The buyer does not have to share it to the seller. It's every client, the seller or the buyer, has their own AD form. So that's number one. Paragraph B, nothing's changed there. And if you ask me what's the one paragraph that is consistently done incorrectly by us agents, I'm going to tell you by a long shot, the confirmation paragraph 2B is either incomplete or inaccurate. And the problem is, if you do this wrong, there's case law where the seller has not paid the commission because confirmation of agency was not correctly done, and they were able successfully not to pay the agent. So when you get one of my little love letters or notes when I review the contract, telling you did this wrong, get it corrected, it's because you are in jeopardy of losing your commission if the party decides to see that as a possible way of not paying. The way that you correct it as a buyer's agent, look at the MLS. All the information is on the MLS to put in the seller's brokerage firm, the license number of the company, the individual agent's name, their license number, as well as checking the box. So you see in paragraph B, you have the seller box or both buyer and seller under the seller's brokerage firm. You need to fill in the box, you need to complete the box in those 4 categories. And if it's incomplete, it's wrong. And the way to correct it, if you're a listing agent, because you're not writing up the offer, you look at that as part of your terms and conditions. And if something is incorrect, you have to use a counter, just like you would do any other terms and conditions. If you're a buyer's agent, I'm going to just say shame on you, because you have the information, and just slow down, do it correctly, and include everything. Okay, any questions on that? Okay, paragraph C, they added as a when more than one brokerage represents either the buyer or the seller. In other words, say you're doing a co-listing with another company, here's where you would check the box and put in other representing the buyer and seller, and there'll be another additional brokerage addendum will be spit out, and you'll be filling that out. Okay. Paragraph D is the parties acknowledge that there's possible representation of more than one buyer or seller, and that's automatic in the it's called the PRBS, and that is based on a lawsuit that happened back 21 years ago, where a buyer sued the real estate office because another agent represented another buyer, and the lawsuit was based on you as a company should be representing my fiduciary duty, and it wound up costing me an extra, in competitive situation to buy the house, wound up costing me an extra $400,000, and I'm suing the real estate company because 2 of you, the other agent and the agent representing this guy, the lawsuit was premised on you should only be representing one buyer at a time. So anyway, that's why this form is saying that we understand that and buyers and sellers, that there'll be other agents, the firm will be representing other buyers and sellers, not just you. And that's the way it is. Now, I'm going to tell you that Gov Hutchinson, who's the attorney for CAR, gave information saying it's okay, or not okay, but legally it's okay to represent more than one buyer on a property. And I'm telling you, that's a bunch of BS. And you can't in a fiduciary manner represent more than one buyer on the same property. So the way that the form is written, it's talking about the company's going to be could be representing more than one buyer and seller. Gov Hutchinson, basically from just a pure legal standpoint, is saying dual agency, where you have two agents representing two different buyers. It's the same thing as one person representing two buyers. And I'm telling you, from a practical standpoint, it's not. So please don't represent two buyers on the same property. And we get into that situation, and I get a call about once every couple months where a host of an open house has two buyers that want to make a offer on the property, and you can only my response is always pick the horse you think's going to win, and refer out the other one. And do not represent two parties on the same property. Any
Mike,
questions on that paragraph? B?
Mike,
Are we
can I
squared
ask
away?
you how you want to handle the chat questions? The chat's kind of blowing up, and I'm just wondering if you want to handle those as they come up.
Yeah,
Or-
let's do it after each page, okay?
Okay, just wanted to be clear.
Yeah, that's fine. And I'm not looking at chat. I'll take a look at it in a minute, okay? Okay. So really everything has been the same, with a little couple tweaks. Here's where we're getting into the difference right now. And this basically is what's called the grid. And the grid has all the deal points lumped together. So it's a central place where you're looking at the deal points. Now, I'm telling you, you still got to look at page, 5 through 16, but here's where the deal points are. In the old contract, there were deal points spread out over the entire 10 pages. And I don't think it was efficient as well as it is today. So let's get into this. First thing is, you know what, I want to go. Okay, let's do this. So the first thing is paragraph 3A, which is the purchase price. You fill in the number, and if it's all cash, you check the box. If it's not, if it is a loan, do not check all cash under additional terms. Next item is close of escrow. And this talks about blank days after acceptance or on a certain date. You could use either one, I don't care. Whatever works is fine. Just understand that when you're counting, the day that it's signed and you have acceptance, that's day 0. So if we have an offer that's presented today, accepted today, we're in contract. That is day 0. So tomorrow is day 1. And then you just count each day after that. Okay. What days of the week do we not want to close escrow?
Want to or can?
Well, the question is, what days should we consider not having closing escrow?
The weekends and holidays.
Weekends and
And-
holidays
And Mondays.
and Mondays. And the reason Mondays, who said that?
Charles.
Charles, come on, Charles, why not Monday?
Because you don't want your buyer to have to pay interest if you're going to close on a Monday.
Right.
I have-
Banks charge interest the minute the money leaves their hands. And if it's scheduled to close escrow on a Monday morning, the wire takes place on Friday, and someone's paying for that interest with no benefit of the house. And that person that's paying for that is the buyer. So, you can't count on what's called a special, which is Monday afternoon, where they wire Monday morning, record Monday afternoon. With COVID and everything else, there's no guarantee that those specials take place. We assume that they do, and for the most part, they're pretty good. So if you could avoid a Monday, that's better. As someone who usually say Fridays are no good, but I love Fridays. Just make sure that it doesn't get delayed.
Always check with your lender, because I've actually come across a few lenders who tell me they don't charge interest until it closes escrow.
Yeah, that happens, but I'm going to tell you, most banks charge interest. But yeah, you could check with your lender. That's great. Okay, so close of escrow date. And what I do is we're coming up to the end of the year. I'll call my favorite escrow company, and I'll get the holidays where the recorder's offices are closed, and I want to know what the holidays are, so I don't schedule a future close of escrow on the day that we can't perform. One of those days that's a holiday is it's in March. It's I just drew a blank. Cesar Chavez Day, and the Santa Cruz and Santa Clara County recorders offices are closed. You're not going to be able to record on that day. So put it early in the year, put it your holidays in your calendar, and you'll never have that mistake or problem. Okay, paragraph C, expiration of offer, 3 calendar days after all the buyer's signatures, or a certain date. That's the expiration of the offer. So the buyer makes an offer, but it's going to expire with one of these due dates. Initial deposit, you put the deposit number down, and I haven't filled this out yet, and I'm going to do it. I meant to do it today to see how that percent of the purchase price, if it automatically comes up or not. But it's basically to help with looking at the offer as to what that dollar amount's going to be as a percentage of the price. The other thing that's interesting for the initial deposit amount, if you look at additional terms, you don't see anything. That the default on this is wire transfer. You don't see anything about a check. You don't see anything about a cashier's check, personal check, nothing. I mean, you could check the box and put in anything you want other than wire transfer, but the default on this is just wire transfer without giving up any other alternatives. Within 3 days, now you could change that to whatever you want to do, 1, 2, but look at it, it's business days. Okay, so you have to count the business days. Saturdays and Sundays are not business days. Okay. Paragraph D2, increase the deposit. If we have an initial deposit amount of 3%, that's the magic number. That's what we want to see. I would say that in the last probably 5, 6, 7 years, we've seen 3% deposits as common. We haven't seen what it used to be 20 years ago, where you would put maybe 1% initial deposit, and then the increased deposit would be totaling 3%, but that would be done typically when you remove all your contingencies. So is it going to change? It could, as it becomes more of a buyer's market, you may see less initial deposits and more increased deposits. But this is what you need to know. Under D2, increased deposit, if you're going to have an increased deposit, you check the box. And with that checkbox, with an increase in deposit, you need a form that goes with that wire or that check. And what that is, it used to be called, yesterday, it used to be called a RID. Today, it's called a DID. And it's basically a new form, a new title that accomplishes the same thing. Basically, what that increase in deposit does is makes that increased deposit part of the liquidated damages. And we'll talk about liquidated damages later on in this class. But if you do not include the increased deposit with the liquidated damages, if the buyer, and there's liquidated damages in the contract that's agreed upon, if the buyer defaults, he gets the deposit, the increased deposit back because it's not part of liquidated damages. So this really is a protection for the seller, but it's also a protection for the transaction of the agents, that the buyer is not going to back out of the transaction just on a moment's notice, that they're gonna look at the consequences that could be involved if they default the day before close of escrow and don't want to buy it. So the increased deposit is after the acceptance, and it's usually based on some event. Now, what they've done in additional terms is they made it the default upon removal of all contingencies. Now, you could check the box and put a different date down, or upon some other action with the second box, but upon removal of all contingencies is the default on this, which is new. They just, in the old contract, they just had either a date or an action item with a box. So anyway, any questions on the DID before I get into the chat later on?
I have a question, Mike. It's just clarification.
Yeah.
You had mentioned that liquidated damages, how is the buyer protected?
Well, I'll get into that, what liquidated damages is, but
All right,
but,
okay.
the definition of liquidated damages is that if the buyer defaults, the seller can only go after the buyer with what the deposit,
Yeah,
or 3% of the purchase price, whichever is less.
Okay.
So for the loss, if the seller experienced a loss, the definition is they can go after the buyer's deposit, not
okay,
basically 3% or the deposit, whichever is less, and not the full loss that the seller can experience, which could be $100,000-$200,000.
yes,
Okay.
yes.
All
Okay,
right.
thank you.
Sure. All right, let's talk about E1, which is the loan amounts. So the first thing is, the first one is the first deed of trust, which has got that $, and then again the percentage. And then it's going to be fixed rate or adjustable by checking the box. And the rate is not to exceed X amount. If you have a loan contingency, it is important that you fill in this percentage, not to exceed. The reason being is that, now again, if you don't have a loan contingency, it doesn't matter. But if you have a loan contingency, it's the loan contingency is just getting the loan. If you don't have a number there, if the rates jump up due to a catastrophic event, say the rates right now are 3%, and there's some catastrophic event worldwide that makes the finance market go in a tither, and all of a sudden the rates become 6%. Do you think that might affect the buyer and their want or need to buy the property since their cost of funds have doubled and they
Yes.
haven't locked in their loan rate yet. The loan contingency is if they can get the loan. There are many people that buy a property at rates at 3% right now that can still qualify for a much higher rate. Yet they may not want to buy that $1,500,000 loan at 6% or 7% or 8%. So this is a protection, built-in protection for the buyer until they lock in their rate to protect them on a catastrophic event of getting a loan. Now, if you don't have a loan contingency, it doesn't matter with any rate that you put in here, because you're saying you don't have a loan contingency, you're going to get the loan and it doesn't matter. So only if you have a loan contingency, I need or want to see an exceed percentage in here, just for the protection of the buyer. Now you could put a much higher rate, I don't care, but it's something that if you're getting a loan contingency, the buyer's probably going to want to be protected on a really high interest rate. So you could put a number higher, 0.5% higher, as long as the buyer can still qualify. It's just really to protect the buyer for a catastrophic event on this. Unless the margins are real low and this buyer's just squeaking in at where the rate is, and if the rates go higher and he can't afford it, you better make sure you have a loan contingency. You better put a percent in here. Okay, points. Buyer to pay 0 points. That's the default. Yesterday's contract just had didn't have 0 points. It just had is going to pay up to a certain percent of loan amount. Here, the default is 0 points. Or you could put more. You can put 1, 2, 3, whatever you want to put in. But that's the default on this. And lastly, if it's an FHA or VA, the lender requires that the home is in a certain condition, and the appraiser will give the condition requirements to the buyer. And this is saying within 17 days that the buyer will give this to the seller, the list of the needed repairs. Okay, to the right, additional terms, it's going to be conventional, or it's going to be check marked with an FHA or VA, or it's going to be seller financing or other. The one thing that was in yesterday's contract was assumable financing. We haven't seen that in a long time, so they decided to take that out. One side note to this is if we're talking about the FVAC loans, there's no such thing as a waiving an appraisal contingency. If there's a VA loan and the house does not appraise, buyer can get out of the deal and get his deposit back, regardless of whether he said contingencies or no contingencies for the appraisal. So just a side note on that one. That's federal law. Okay.
Wait, can you say that one more time, Mike? We don't need the appraisal contingency if we have a loan contingency?
No. In a VA loan, you cannot waive the appraisal contingency. It's automatic, federally protected that a buyer can get out of the contract and get his money back on a low appraisal.
But every other loan, it's two separate contingencies that are required.
That's correct. Two contingencies on, no, I'm just talking about the appraisal contingency can't be waived. Even if it's waived, the buyer can get his deposit back. But a conventional loan, you still have the loan contingency and you have the separate appraisal contingency, which we'll go over in a few minutes. Okay, E2 is we talked to E1 about the first loan. This would be, E2 would be the second loan. And it's the same verbiage as up here as a second deed of trust. It's got the dollar amount, the interest rate, and also the points. And it's either conventional or seller financing. E3 is occupancy type. And that's where it's the default is primary, but they added a couple boxes, secondary or investment. So the reason is that the lender wants to know if this is going to be on the primary house, or if it's going to be a rental or investment house, or it could be the secondary home. And then you have the balance of the down payment, and then the total purchase price should equal what the top line is on that. Okay,
Mike,
let's tackle some questions.
I have a quick question. Does it automatically do the math?
You know what? I haven't checked on that, Renee, and that's one of the things I wanted to do. I'm hoping that it does.
I mean, I'm scared if it leaving it up to the realtors to do the math. That scares me.
Hey, Renee, I am putting an offer together right now, and hallelujah, it does the math. I
Yes.
just put the stuff together. As Mike is explaining things, I'm filling the stuff in. So
Perfect.
Outstanding.
Good. Let's get to Renee. Can you help me with the chat? We had some questions.
Absolutely. Okay, the first one was a little ways up, and Andy had some things, questions regarding multiple APN numbers. And so if you put a purchase price in, that purchase price is for those multiple APN numbers, correct?
Yeah, so the APN number, the only difference is that they've incorporated in the new revision the ability to put two APN numbers in there. Yesterday's contract only allowed, you can only put one unless you jury rigged it.
And then Andy, you had a little more to your question?
Yeah, so I guess I'm wondering from like a data standpoint, does it kind of skew numbers if you're trying to get data for properties and like you're looking at historical data of what properties sold for? You know, is it going to show up as both parcel numbers sold for, you know, say there was two properties that you got for $1 million, does it show up on like a record as like 500 for each, or, you know, how do you gather that data?
I don't know. That's a great question. I don't know. I'm hoping it'll just show up as well, yeah, I don't know.
Okay, I was wondering if it kind of skews some data, you know, it'll sound like maybe two properties sold for 500 each, or is one, you know, $999,999, the other one for $1.
Yeah, I don't think it'd be any different than what we had yesterday.
Okay.
I mean, we're gonna have the same problem in looking up data if two APN numbers are included in one purchase contract.
Right. Okay.
I think a lot of it is geared not for the rural land. I think it's really the property that's maybe 10,000 square feet that can divide into 5,000 square feet, and it's you know divided, but they're selling the original lot and you know both properties.
Gotcha.
Okay, well, Cindy asked, I just want to verify, I answered Cindy's question. I want to verify I did it right. It says, when mentioning or referencing the contract date on subsequent forms, is it the date prepared or date ratified?
Date prepared is the reference.
Okay. And then she also had a really good question. Well, not that the first one wasn't good, Cindy, but her second question said, you said you can't represent two buyers for the same house, but what if your first buyer's offer didn't get accepted and they're done, they're gone? Can you then represent another buyer in that particular, for that particular home?
Let's define, are they done? Or are they wanting to go
They're-
resubmit a new
No, they're
offer?
out completely. They're finished with that house. They say it's too expensive. We're out.
So then you're not, I look at it as you're not representing anyone anymore on that house.
Okay, that's what I thought, but I just wanted to clarify.
Okay,
Okay, so, and if you check the loan contingency, but not the appraisal contingency, and you're denied financing because of the appraisal, you're still on the hook for the home, correct?
yeah, there's two separate contingencies.
Okay,
One is qualifying for a loan, and the other one is the house appraises for a certain dollar amount.
okay,
And they're not interchangeable.
okay. Well, I think that's it. That's all that's in the chat.
Okay, perfect. Any other questions before we move on to page 2?
I'm just glad the math is done.
Perfect. Well, now you could rest. Okay. G1 is seller credit. I think this is a great little addition to the contract. This basically puts it in there in the paragraph, seller credit, if any, to buyer, a dollar amount, and then it also has the percentage. Now, AJ, when you put in a dollar amount, does it automatically put in the percentage?
Let me do that right now, Mike. I'm on that page.
All right.
So if I do, it did it for the for initial deposit. So I'm going to do
Perfect.
it here also.
Okay, I'm sure it's good on everything then.
Yeah,
So,
so I'm going to do
the
it.
important thing here, seller credit to buyer is important because look at the additional terms. It's seller credits to be applied to closing costs or other. The lender usually will limit the amount of credits to the buyer to a certain amount of money. And the reason is they want to make sure that the buyer has skin in the game, or if they're saying that they're getting a 20% down, 80% loan, that they actually have that much equity into the property. If the seller's credits were not limited, I can make a deal as a buyer with the seller, say it's $1 million. I could say, Mr. Seller, I'd like to make an offer at $1.5 million and give me a credit for 500,000. And if I get an appraisal for $1.5 million, I just made a lot of money buying that property, and I don't have my 20% down. So you could see with that scenario that's why lenders want to limit the amount of credits that a seller can give to a buyer.
Then there's
Mike,
tax.
Mike, one little problem that happens with putting any of these numbers is when I put the seller credit in there, it gave me the percentage, but then I said, "Ooh, I made the mistake. I need to take it out." It leaves the percentage in there.
Okay.
And then you have to do a couple of more times, click and click and click to remove it. So be careful, guys, that if you remove the seller credit or any of those things, do a couple of clicks so that you can remove the percentage also from there.
Shouldn't you be able to uncheck the box and that would remove it?
It doesn't. That's what I'm talking about, Charles.
But if you read,
it leaves the percentage there.
if you read underneath what it says, though, it says the percentage number above is for calculation purposes and it's not a contractual term.
Yeah,
So-
there you go, Renee. So even if it leaves it, you are not on the hook. Great.
Yeah,
Good point.
It's a good point, AJ, just for us to know how to work it when we're writing it up. Okay. Additional finance terms, anything in there that you would want want to put in for the loan that you could think of. Whatever you want. What I like about the next H1, H2, and H3, it's all together. Whereas yesterday's contract had it in different parts of different paragraphs. So H1 is the verification of all cash. And the default is that it's in the old, I referenced the yesterday's contract to the old contract, but in the old contract, you had to check a box at the end of the paragraph if it was going to be attached with the offer. They flipped it and made it the default attached to the offer. If it's not attached, then you check the box and put how many days after acceptance. Same thing with verification of down payment and closing costs. And then H3 is different. And that's where they add, we used to have a verification of the loan application, and that we'd have a pre-qual, pre-approval is either attached with the offer or where it's going to be provided. They expanded that in additional terms to you check the box for pre-qualification, pre-approval, or fully underwritten. The problem is there's no legal definition of those terms. So when you get an offer and it says one of those three, you probably, if it's not a pre-qualification and they're marking pre-approval or fully underwritten, you want to dig a little deeper to make sure exactly what they're supplying you, supplying to your seller or you as the listing agent. So
quick question, Mike, on that one. When I'm writing the offer, if it is a pre-approval from my buyer standpoint, should I check anything or just leave it?
no, I would check whatever it is.
Okay, got it.
Pre-qualification, pre-approval, check with your lender, and then be prepared to defend what you check.
Got it. Okay, thanks. Yeah.
Okay. All right. Paragraph J, final verification of condition. This is a little different than the old contract. The old contract used to say within 5 days. If you notice in paragraph J, it just says 5 days. So that's a big, that's not a big difference, but it is a big difference. You used to be able to go, okay, 5, 4, 3, 2, 1, or day before, be able to do that. This is saying that 5 days prior to close of escrow, you're going to do the walkthrough. If it's not going to be done in 5 days and you have it in the contract, just like any other term that you're not going to do and you need to change it, do it in an addendum and get all parties to sign on that. So you're going to have to be a little more planning out your final verification of condition. Now, is a final verification of condition required? Is it mandatory? I'm telling you, as a KW agent, as a buyer's agent, yes, that is a standard of care that we need to do. But if you have a listing and the buyer and the buyer's agent don't want to do a walkthrough, that's not the end of the world. You can't force them to have a walkthrough. I think it's risky. I think it's not the standard of care that should be done, but we're not going to govern other agents and how they protect their clients. Assignment request. This is also different. The old form would have an assignment paragraph, had an assignment paragraph where the buyer had the right to assign the contract. Seller would have to approve, but would not unreasonably withhold approval. This contract says that the assignment has to be done within 17 days after acceptance. So if you have a flipper that's in escrow and they want to assign it and they basically sell it without closing escrow to someone else, they better get it done within 17 days. And they better get that acceptance done within 70 days from the seller, or else the seller does not have to approve the assignment.
The assignment isn't a contingency though. Like if they can't find someone, they don't get to just back out. Is that
Yeah,
correct?
the assignment is just the ability for the buyer to assign it, to partially assign it or fully assign it. I mean, technically, an assignment can be the husband putting the wife on the contract. He's assigning half of his interest to the wife. That's an assignment. Now, that's not what this is geared towards, where the seller cannot withhold, cannot approve that assignment. Technically, they don't have to, but this is more generally for the flipper that's going to make $100,000 by just assigning the close of the purchase agreement to the new buyer and get $100,000 for doing nothing. So that's what that's for. So regarding unreasonably withhold it after 17 days, seller's not going to, in real life, the seller's not going to unreasonably withhold adding a wife to the contract. But they now have the ability to withhold that flipper from making $100,000, $200,000, $300,000 on what I used to call a double escrow.
Now, I think though, Cindy's question, if I'm reading or hearing her correctly, is say the guy isn't able to find someone to assign it to within 17 days, they're still on the hook for the contract, are they not?
Yeah, this 17 days is not a contingency. This is just the ability for the buyer to assign this contract. It's not that they're going to do it. It's just that they have the right to do it, but that assignment has to be done within 17 days, or goodbye any future assignments. It's not part of the contract that is part of any contingencies on there. If you want to have an assignment contingency, then you better put that as a separate contingency. The assignment is not a contingency. Did I answer the question?
Yeah, I think so.
Okay.
But I mean, like, I think I've always left that blank in the regular contract. I mean, do you suggest we zero it out? I
No,
mean,
the old contract, there was nothing to put down. It was just that there was the ability to assign, and it shouldn't be unreasonably withheld by the seller. This is putting now a date that after so many days, it's not a guaranteed assignment anymore. That's all.
So if both of the buyers, like say the wife and the husband, are already on the contract, they're already on the loan, we could just put a zero there. I mean, that doesn't really have much bearing on the seller. Is that correct? It's not bad or good or whatever.
It's just saying that there's no intent to assign it. That's all.
Okay.
And I'm gonna tell you, Cindy, that probably that's gonna be left blank on 9 times out of 10 contracts.
Okay. Well, yeah, I just didn't know if it would be a negative thing if it was left blank, or if it's just seen as kind of moot.
It will be, I would say that it'll be left blank more often than not. And I mean, there's nothing wrong with the assignment. You know, the person that is the assignee, the end buyer, has to live with the terms of the contract. So they can't change any of the contract. Just, I mean, this is not worth anything. It's just useless information probably, but years and years ago, instead of seeing assignee, you would see nominee. And there's a huge difference between nominee and assignee. You don't see nominee anymore because the definition of nominee means that that person, that end buyer, can change the terms of the contract. That's why you never see that anymore. So take that out of your mind. Don't worry about it. I don't know why I said it. It was just, it came out of this brain of useless information. Don't worry about it. You'll never see nominee again. Okay. Where are we? After assignment. Okay, contingencies. All the contingencies that we're dealing with in this purchase agreement is in this grid, paragraph L. All the contingencies. So eight buyer contingencies in here. So the first one is the loan. And the difference in this contract is, you see the number? The old contract was 21 days. This is 17. And if there's no loan contingency, check the box. Second contingency, just like the old contract, it's a separate contingency of appraisal. Now, what I like about this contract is that it spells it out real clear and concise that the appraisal contingency shall be based upon the appraised value at the minimum of the purchase price, or a certain, check the box in a certain amount. So say you're buying a property for $1 million and the buyer's got an extra $50,000 in case it doesn't appraise at $1 million. To protect your, and you need an appraisal contingency. You could put, and the buyer's willing to pay additional money if it doesn't appraise at $1 million. But he only has $50,000. So he wants to say, okay, I'm willing to put up to $50,000 towards the purchase price. So you might have an advantage over the competition that needs a full appraisal contingency at the purchase price by simply putting the checkbox here and putting $950,000. So if it appraises at $950,000, the buyer will put an additional $50,000 should it only appraise at $950 and still be able to buy the property at $1 million. Is it more of an advantage over another buyer that needs the $1 million appraisal? Absolutely. This is the way to do it if you're going to do this.
So Mike, we used to do that in other terms, right? Most of this, and now it is very clearly spelled out, which I like actually. So,
and AJ, when I would review contracts, the wordsmithing that we would use would make it confusing half the time.
Right.
So this is short and sweet and simple, saying that when I see this and I see a checkbox with a number here, it's real easy to ascertain what the appraisal is going to be and what the buyer's willing to come up with as additional cash.
Absolutely, yeah. Yeah, this is very clear. Yeah.
Really clear.
So does that then take out of the buyer's wheelhouse the opportunity to negotiate the purchase price down because they've already stated that it's $950 once we're, at that point?
Yeah, what you're saying is saying that if it appraises at $950 or higher on $1 million sale, the buyer's gonna buy the property.
Okay.
Well, there's no negotiation.
Okay.
What it's really good for in a market that's competitive with a lot of buyers is it's an easier way to differentiate yourself from another buyer that has the full appraisal contingency. Okay, notice also what numbers here. 17 days. Go down the.
Mike, before you continue, so the max purchase price will be the price that we put in L2, right? 8B. That will be the max they will pay.
The max that they would pay is the max that they pay is what you put in terms of the purchase price. That's the max you're paying.
But if the appraised value, the minimum of purchase price.
The appraised value is not a number higher than the purchase price, it's lower than the purchase price. You're not making an offer at $1 million.
That's right.
And
Got
want
it.
an appraisal at $1,050,000.
That's right.
Yeah,
So
so it's.
the difference between the appraised value and the purchase price couldn't be more than $50,000, for example.
Or whatever it is.
Whatever, yeah,
That
yeah,
your,
got
that your buyer's willing to pony up.
Now I understand. Sorry,
Okay.
sorry.
All right, good. All right, look at all the columns here, the times. They're all 17 days, every one of the contingencies. Okay? All right, let's go in contingency removed. You could have no loan contingency, check the box. No appraisal contingency, check the box. All the rest of the contingencies that need to be removed, you need to check the CR attached and it'll spit out a contingency removal form. Now, if you want to do all contingencies removed on one form, that's fine. But this contract allows no contingency and no loan and no appraisal contingency, check in the box. Paragraph L3.
So Mike, a question here. If I have CR attached, if I didn't do on the top those two check boxes, no loan contingency and no appraisal contingencies, but I had a CR attached and I said all contingency removed, it's the same effect, right?
Yeah, and actually, if you are using the CR form and you don't have a loan contingency or appraisal contingency, and you're removing one other of these contingencies, L3 through L8, one of L7, I would include in the CR form, I would check the box, no loan contingency and no appraisal contingency also, just to make it easy for the seller's agent to see that these all, the contingencies that I'm removing are these. So it's just, I think it's, you're trying to make it as easy as possible to the seller's agent. So I would duplicate my efforts by putting that in, checking the box, no loan contingency, no appraisal contingency in L1 and L2, and still do a CR attached with the other contingencies with those two.
With those two. Okay, got it. Thank you.
All right. So L3, investigation of property. This is the group of contingencies or investigations that the buyer looked at all lumped together. You want to look at whether Megan's Law, you want to look at the ability to get insurance. You want to look at the physical condition of the home. Everything in there that was in paragraph 14 is there, and it's 17 days. Now, here's a little bit below that is a little bit, was on the old contract, but it's spelled out a little bit more. And this is saying that the buyer shall have 17 days to access the property. Even if they remove their contingencies, they have the right to access the property. It's not a contingency. So if the buyer finds something during the accessing the property, they can't get out of the contract. They can't breach the contract, but they do have the right to get in there. And they have the right to get into the home in 17 days, whether they remove the contingencies or not. Any questions on that?
I do. Oh, the information, I have a question on the information, investigation of property.
Okay.
Do you still recommend that we not remove that contingency? Because at one point you were saying that we should have at least 3 days.
Well,
And then
who not removing it? Buyer's agent or seller's agent?
buyer's agent.
Yeah, you know what? It's gotta be, it's gotta be up to the buyer. If the buyer does not want to have any contingency, you just need to drill down, and make sure.
Okay, and then so the follow-up question to that is if the buyer does not have the physical contingency or the investigation of property contingency, and they're not able to get homeowners insurance, they lose their deposit, correct?
That's part of the investigation of property is getting the insurance.
So they would lose
Ability of
their,
insurance.
okay. Just checking.
Yep. Okay, the information access to property can be used for any reason for the buyer. If the buyer, here's one of the things that could be done. If the buyer says they're going to get all cash, they're going to pay for it all cash. And then their financial guy says, well, you know what? I know you can buy for all cash, but why don't you, money's cheap. Why don't you get the loan? And you need an appraisal to get a loan. This 17 days will cover access to the property. So the buyer has the right to get into the property. So the theory that seller doesn't have to cooperate with the loan, that is correct. But the buyer has the right to have access to the property. Just a side note to that. But you know, I've heard, you know, over the last year and a half now, granted, might have been due to COVID, but a buyer wants to do some measurements and seller says no. Well, buyer has the right within 17 days to do measurements. Okay. L4, review of seller documents. Again, 17 days. Or 5 days after receipt, whichever is later. If the seller is slow on his documents, it may go longer than 17 days. Preliminary title report, again, 17 days. HOA package, 17 days or 5 days after receipt. L7 is a solar lease or any type of lease that's there. Review that. And then the last contingency is the sale of the buyer's property, and that is the same form, COP. All the contingencies are all in one place. Makes it real easy. Okay, possession. Time of possession. So the old way was the default was 6 p.m. On the date of recording. Now it's the notice of recordation, not 6 p.m. unless you want to check 6 p.m. So if it goes on record at 1 p.m., that's when the buyer has the possession now. Whenever the recordation takes place and it's confirmed. Or you could change it on a different date or a different time. And you change the date just below that, where if it's going to be seller occupied or vacant units, the default is close of escrow, or you could check the box. The changes is now it splits it up between 29 days or less or 30 days or more. What's the significance on 29 or 30?
SIP as opposed to a real lease tenant landlord relationship.
That's right. It's either going to be a RLAS or an SIP. So that's why it's split up there. So you got the time in M1, and then you got the date in M2, and then M3 is new. And that's when it's tenant occupied. Let's go back in history yesterday with tenant occupied property. The seller said that it's either going to be vacant or the tenant's going to stay in the property. And that's what it was. And if it was going to be vacant, the burden was on the seller to get that tenant out of there. Today, it's different. That TOPA, which is the tenant occupied property addendum, first of all, it's used if there's a tenant at the time that the agreement is accepted. So the property's on the market, it's tenant occupied. You make an offer, and if it's occupied at the date you're making the offer, you need to have a TOPA with you attached to the purchase agreement. That TOPA has two things. It's going to say the property is going to be vacant, or it's going to be occupied at close of escrow. If it says that it's going to be vacant and it's still occupied at close of escrow, today's TOPA or the contract says, Mr. Buyer, either you accept the tenant that's in there and you deal with it, or you can cancel the contract and get your money back. A big difference between yesterday and today. To make it even more of a concern is that the poll was done with qualified real estate attorneys looking at the TOPA. And I think that it was 8 out of 10 said if they represented the buyer, they would not have, they would strongly urge their buyer not to sign the TOPA. Anyway, that's what we have. So what I would like to see is that the standard of practice of care would be, if you come across a tenant occupied property that you want to make, that your buyer wants to make an offer on, an email in writing with a copy of the TOPA agreement, urging your buyers to review it with their attorney before signing it. That is strongly urged by most of the attorneys that I've talked to.
So I don't know if I'm understanding this correctly. With the TOPA, the buyer, if the tenant is still there, because you would,
And the seller has said that the property will be vacant.
okay, and if you're representing the buyer, you would never let it close escrow with the tenant still there.
That what the TOPA says is that if the tenant's still there, the buyer has a choice. Accept the tenant in there and deal with them and kick them out on your own, or cancel the contract.
Up till when?
That's all it says.
So
No,
basically,
no,
like,
you close escrow and inherit the problem, or you walk away and get your deposit back and the money that you spent in inspection and things like that.
I don't know any buyer's agent that would let it close escrow with the tenant still in there.
It's up to the buyer, really.
Yeah. Okay, thank you.
It's a big difference between yesterday and today. Would you agree?
So could you back out the day before the close of escrow if the
Sure.
tenant's still in there?
Sure, if the tenant's still in there, it's supposed to be out. Absolutely.
Okay.
Well, I mean, you wait the day to see that the tenant's out at close of escrow date. But yeah, the buyer has the right to close, to either close escrow or to cancel the contract and get their deposit back.
So would they actually get their money back if it's the day before closing? And I know we're getting into the minutia, but if it's supposed to close tomorrow,
Then
that
I
means
would
that
wait- then
the
I would wait
lender's
until
funded.
tomorrow to cancel the contract.
But the lender's funded everything.
Well,
What happens to the money? I mean, everything goes
money-
back to the bank, and
It goes back to the bank.
has anyone ever had that
Or-
happen?
Or what I would do, Renee, is I would fund it in the morning and try to do a special in the afternoon.
Okay. If they're still there, if they're not, and if they're there, then at that point, quit it, stop it.
Or,
If the buyer
or-
wants to.
or buy the property and deal with a tenant that needs to be evicted.
Having worked a year trying to get a tenant evicted, I ain't going there again.
Well, I mean, why it's even more important to know the TOPA addendum.
Mike, wouldn't it be when you're doing the verification of property at that point, wouldn't it be the right time then? Hey, if it's still occupied, let's get this taken care of before you have to get to that point. Take care of it right then.
Well, I mean, it depends. If the tenant says, I'm going to be out of here at close of escrow, the walkthrough is going to be 5 days before that. I mean, that's not as big of a deal as the tenant saying, you know what, I can't find a place and I just lost my job and I'm staying in here for the next 6 months.
Nice to know you, partner.
Anyway, it's important that we talk to our buyers and make sure that they are familiar with it. Now, again, it doesn't deal, we don't deal with TOPAs if it's owner occupied or vacant. We only deal with TOPAs if there's a tenant in there.
Got it.
Okay. But I mean, there's enough tenant occupied properties that this will become a problem, at some point. And the seller can say, buyer, take it or leave it. I can't get the tenant out, cancel the contract. I guess that could happen.
Mike, is there any other form that could be included where you could specify by which date you can?
Yeah, you could you could change it totally to write an addendum saying that it'll be responsibility of the seller to get the tenant out, and buyer will not close until the tenant's out, and this will, you don't have to accept the buyer doesn't have to accept the TOPA. They can come up with their own terms and conditions as to wanting to buy the property.
Could that be written in section R where it says other terms?
Yeah, but you probably need an addendum.
Oh, okay, yes.
Just a regular addendum.
Yes,
Addendum
okay.
1.
Yeah.
Okay. I'm just reporting what we have here. You could change anything in a contract, in this contract, as long as both parties agree to it. That's the way it could be. Okay, let's move on. It would be probably a good idea after this class to look at the TOPA. And so you could look and read what I'm telling you. But I just need to point out the big difference with this TOPA versus what we had yesterday is that there's an option if the seller can't get the buyer out, take it or leave it, and you accept the tenant in there, or you cancel the contract. It is, I would say, a much more pro-seller approach than what we had yesterday.
If the seller can't get the tenant out.
If the seller can't get the tenant out. Okay. I mean, everything is built on that. The seller wants to sell and the buyer wants to buy, except unfortunately, we don't always control all aspects of every single person, and the tenant, can't be controlled to the extent of getting them out. If the tenant doesn't want to get out, there's going to be a process.
I would be careful on those as if you have a short sale.
Yeah. Although that's probably not tenant, that would be the owner.
Well, a lot of the owners that tried to sell those properties had tenants in there.
Yeah, oh, I agree with you. I agree with you. So usually it involved writing a check, Charles.
Yeah.
Yeah. Okay, let's move on to N. Oh, the other thing I wanted to talk about is paragraph I was intentionally left blank because it looked like a 1 and they didn't want to have any confusion. Same thing in O, looking like a 0. They left it blank, didn't want to refer to any paragraph O or I in there. So just a little side note on that. Okay, so are we clear that one of the big changes in this whole contract is what we just talked about, the TOPA? Okay,
Yep.
it's a brand new form. It is complete different thought process than what we used to deal with. Okay, N. The end, paragraph N deals with seller deadlines. So the seller has to deliver the documents 7 days. Seller has to sign and return the escrow holder instructions within 5 days. The fees to order the HOA docs, 3 days, and installing the smoke alarms detector and water heater bracing has to be done within 7 days. That's important because if you're getting an appraisal, you want to make sure that that stuff is done before the appraiser comes in. That's why you might want to change it from 7 days to 3 days. Anyway, and then evidence of representative authority. That's where we would have the what used to be the representative capacity. If there's other forms being used, such as a power of attorney, items like that. So these are all seller documents, seller deadlines. Okay, anything in the chat? Any questions on this page?
Whoops. Yeah, there is from me.
Okay.
On the on the top of this page, it says that the credits will be used, will be applied to closing costs or other. I didn't think there was anything other that the credits could be applied to.
Yeah, well, from a lender perspective, we like to see it just as closing costs. Can there be something else? I would, if I was going to check the box, I would want to make sure to my lender that he knew what is approved or not approved. So
Okay.
I would first call I would make would be, if it's not going to be closing costs, I would talk to the lender. What can it be?
Have you ever had it be anything other than closing costs?
No, I mean, I've had it where it's closing costs such as non-recurring and recurring. I've had recurring closing costs paid as a credit. But again, individual lenders will dictate whether, recurring closing costs could be, one thing would be property taxes. That's a recurring closing cost. Insurance is a recurring closing cost. But a lot of lenders don't want recurring. So I think they did the right thing there, just putting down closing cost period.
Mm-hmm.
And leaving it up to what is allowable by the individual lender.
Okay. No other questions.
Okay.
I have a question.
Sure.
L2, we're back to the appraisal section. Okay, as per your example of $1 million offered, and you suggest that they have 50,000 and they mark that box if the buyer has an extra 50,000 in case it appraises at 950,000.
Correct.
Now, over on the right, do we leave that box on the right unchecked for no appraisal contingency, or?
Well, you would not want to check that box because you do have an appraisal contingency. If you check the box 950, what happens if it appraises at 920?
Yeah, okay,
So you
Just
have an
wanted to-
appraisal contingency, it's just not at purchase price.
okay, all right, so keep it unchecked in
Yeah,
case,
you,
yeah,
you still have, even if you put a number down, you
Yeah.
have an appraisal contingency,
okay,
no matter what the number is.
all right.
The other thing I wanted to point out is that on L6, line L6,
Mhm.
again, it's the reference paragraphs are 8F and 11K, not 11F.
Okay,
Mm,
So just make note of that. It doesn't make that much difference other than it's wrong.
Where to find it, yeah.
Yeah.
okay. All right, next page. We're almost done with the grid. Okay, so this deals with the what's included and excluded personal property or fixtures and personal property. So this, I think, is the same as paragraph 8 in the old contract. So let's take a look. And let's dive in on this. So all these things here would be checked if you wanted to include them. The one thing that is checked, that by default is checked, is bathroom mirrors. Okay, there's been a ton of problems when buyers would come into the bathroom, look at the mirror, think that that's a mirror that stays with the property, and the seller characterizes that mirror as a picture frame and takes it with them. So this eliminates that, and it's saying that the bathroom mirror, whether it's permanently attached to the wall or like a picture frame just hanging, is going to stay with the property. If it's not going to stay with the property, then you would want to exclude it and put it under the exclusion.
Mhm.
So if you look at all the boxes, you check all the boxes that you want to stay with the property. P2 is everything that is excluded. Now, if you run out of room, you have an addendum and just make a bigger list. Okay. Allocation of costs. Okay, what they've changed here is if you look at the central column, it now says, and it defines that the cost is going to be split equally if both buyer and seller, if both is checked. So if you have both checked, it's not a 75-25 split, it's a 50-50 split. Okay, so either the buyer pays, seller pays, or both pay evenly. And you can look down the list. Natural hazard disclosure report. And then Q2 and Q3 are additional reports, just like the old contract. Paragraph Q4 talks about not the time frame, which was 7 days, but who is paying for it. That's what paragraph Q is who's paying for everything. And down the list, government required point of sale, corrective actions, inspections. So it would be one item that would be a corrective action point of sale that we have in Santa Cruz.
Sewer lateral.
Sewer laterals, exactly. As to
Low flow toilets and shower heads.
Yep. Okay.
Does that count, Mike, for the pool safety thing with the,
Yep.
what is it, 2 or 3 out of 7?
Yep. Yeah, I would imagine that is, I think is that a government requirement?
I thought it was a law.
Yeah, is it required to at the point of sale, or is it needs to be done like we have now at low flow toilets in Santa Clara County?
I think it's to be done at the point of sale, but I think I'd have to read the verbiage in all the property inspections when they mention, you know, that the pool has to meet X number of items and.
It's supposed to be done at installation, actually.
Yeah,
Yeah, so
I-
it is
I-
not at the point of sale. I don't think so.
I think that's the case, Cindy, is that it needs to be done by the homeowner, just like we have low flow toilets in Santa Clara County, that either they should be done by everyone, whether you're selling your house or not. There's not a point of sale for low flow toilets, because it
Is
should
that
be
a
done-
forcing point of like saying, hey, you have to have two? Because the property inspector does call it out.
Yeah, no, I get it, but I don't think it's a point of sale. You know what? I'm not entirely 100%. But I got a feeling it's just a requirement that every owner should have that. I mean, in Santa Clara County, there's no point of sales as of today. There will be. I mean, they constantly try to make some point of sales take place. The last one that I remember was probably about 5-7 years ago, where they tried to make all chimneys not burn wood, and convert them all to gas. And
Mike,
that was about a $5,000 per fireplace.
did you cover, because I really think that the one Q4 is really worth noting. I don't know if you had mentioned it or if I was asleep when you mentioned it or whatever, but the choice of who pays for the smoke alarms.
Yeah, that's a negotiable thing. But most of the time it's a seller cost, but anything in here is negotiable. You could put buyer, you could put seller. I think the big, more important thing on that, Renee, is not Q4, but N4, which is when it's going to be done.
Right.
But it's a total negotiable thing.
So Mike, in that, we should fill that out, the smoke alarm, the stuff of like from a writing a contract standpoint, should we fill it out or leave it?
I would fill it out, AJ, because you need to get it done. And if you're getting an appraisal, I want that work done in 3 days. I don't remember going through when I showed the property whether it has the smoke alarms and CO2 detectors.
Got it.
So I might just put in my automatic that I would put seller to do within 3 days and seller to pay for it, just to cover myself. Escrow fee. Buyer, seller, both, each to pay their own. I personally don't like each to pay their own. I mean, I could see that happening, but I would rather use buyer and seller in both. I just up here, because it's pretty clear cut that it's going to be either depending in the county, either the seller's going to pay it or seller's not going to pay it, all of it. So I would prefer buyer, seller, both, but you guys could do what you want to do. Owner's title policy. Buyer, seller, both. Buyer's lender, it's a buyer, there's no choice there. County transfer tax, city transfer tax is do what's customary in the county, and county transfer tax is seller, and city transfer tax is usually a both. And again, I mean, you could have the buyer paying for it all, you could have the seller paying for it all. So what's negotiable? And then the HOA prep disclosures, the HOA fee is a seller there. The certification fee, which is usually lender required, is a buyer. HOA transfer fees could be a buyer, seller, both. When I'm representing a buyer, I usually check seller. Private transfer fees, the default is that it's the seller. If there is any private transfer fees, I kind of like this instead of what what the old contract had was a either buyer or seller. I think there's less negotiations if it's something is in the default. So, and it should be a private seller private transfer fee. Which there are no new private transfer fees, but there are existing private transfer fees that are still out there. And then 16, 17 are blank. Paragraph 18 talks about the home warranty plan. It's either a buyer or the seller, or the buyer's gonna waive it, or it's gonna be split. Nowhere in here does it say anything about the agent. Why? Because the agent's not a party to the contract. So your decision here would be buyer, seller, or both, cost not to exceed a certain amount issued by the company. The old plan had, the old contract had, all the upgrades. Well, forget about the upgrades. It's almost immaterial. What's important is the price. So you can get, if you put the number in here, make sure it's including the upgrades that the buyer wants. Could be air conditioning, could be roof, could be, refrigerator, whatever. Put a cost not to exceed number, and then you don't worry about what other upgrades you need to formally put down on there. Any questions? Any questions on the page?
Yes, there's one question in the chat that I really, when we talked about the credit and we said the credit was only towards closing costs, someone asked, what about using the credit towards reducing the purchase price?
Well, I don't think that would be a credit. I think it would just be, yeah, you know what? Just whether you do it there, or whether you just do an addendum that the purchase price to be X amount. I would rather do, well, hold on a second. It's not going to be that. It's not going to be that way because you're writing up the offer. Why would you make an offer at $1 million and then seller credit $5,000 to make the sales price $995? Wouldn't you make the initial offer at $995 then? So I don't buy that the credit for the cost. There may be a credit after investigations, but that's not going to be at the time that you're writing up the purchase agreement.
Okay, and then the other thing that
We're writing up this purchase agreement when we haven't done anything. So I would say not for any lowering the purchase price on the initial offer.
yeah, because usually if you do have a credit, it's towards closing costs.
That's it.
The only other question I have, or the other thing, statement is that a lot of these lines, if it goes over the lines, there's a thing called the text overflow
Yes.
that is automatically brought in that you cannot get any other way other than text overflowing.
Yes.
Okay.
I don't like to see many text overflowing addendums, please. The reason being is that you're making this too wordy. And remember, we want to write a clear and concise purchase agreement, leaving no interpretation. And the more words you put in or paragraphs put in, odds are that you're going to make it more of a not as clear and concise as it can be. Okay. Any other questions? Renee, was there any others?
You're answering all the questions.
Cool. Okay, good. We got another 20 minutes. We'll get through this page and then we'll have time at the end for any other questions that you guys come up with that you haven't yet. Okay, so paragraph 4. The first 2 boxes are new, and that is the probate agreement purchase addendum and the manufactured home purchase addendum. Previously, we had a whole separate purchase agreement for the for the manufactured home and the probate. Not anymore. We use this contract. And we just add the addendums. In addition to the addendums, we're gonna have the TOPA form that we talked about. And they give you some hints on that third box. Bottom line is, whether the tenant's gonna move out or not, you include a TOPA addendum if there's a tenant at the time you're writing the offer. Okay, and then the last two, we don't really see that much, but there's a TIC purchase addendum and a cooperative purchase addendum. Those are types of ownership that are rare down in this area, mostly up in I would say in San Francisco, if you're going to see a bunch of them. Okay, let's talk about other addendums. Any other addendums that we would want to add to this were usually found here, with the exception of others, which are two blanks that we can add other things to it. But it's got the regular addendum. I say regular, but that's the blank addendum is the first one. Backup offer, septic, exchange, short sale, court confirmation addendum, and the seller exchanging. So that's where the addendums are all based, and below that are advisories. Now, the thing about advisories, the difference between addendums and advisories is that addendums are part of the contract. Advisories are just information that's really just for the benefit of the parties, and it's not part of the contract. And there's 4 of them that are automatically spit out when you write up an offer with the advisories of the inspection advisory, the fraud, wire fraud, which, guys, is still going on. It's getting more and more people are working to separate your money and your client's money from them every day. So go over the wire fraud advisory with them when you're writing up the offer, or even when you're accepting the offer. Make sure that you cover these items, especially spend the extra time on the wire fraud, discrimination, and then the consumer privacy, and then anything else that form. I don't know why they did not include the statewide buyer and seller advisory, the SBSA. I think that's an important advisory that should be included in every transaction. I don't know why they didn't include that automatically like they did the other 4. But anyway, okay. Additional terms affecting the purchase price, paragraph 5. So the initial deposit, well, first of all, same thing, that the funds are good when they're deposited with the escrow holder. Same thing as what they said yesterday. Paragraph 5A. Yesterday's contract is different than paragraph 5A. There is no option to give the check to us, the agent, in our contract anymore. Okay. 5A1, buyer shall deliver deposit directly to escrow holder. And then it says, if the method other than wire transfer is specified, and it's and there's another form other than the wire, if it's unacceptable to the escrow holder, then the escrow holder is going to say to the buyer, I don't care whether you like it or not, wire it. So that's in paragraph 5A1. So remember that it was an option in the grid, but they're saying that if that option doesn't meet what the escrow holder is willing to do, then the escrow holder can demand that it's going to be wire. Okay. So a little bit of verbiage in there. All this stuff is in our yesterday's contract paragraph 3, but it's just worded a little bit different. Increased deposit, same thing as what the old contract had. The only difference is that it's going to be the form DID instead of RID. Okay. And there is also in paragraph 3 talks about the retention of the deposit and that you should consult with a qualified real estate attorney regarding the release of deposits or things like that. It's the same as, it's basically the same as what we have now. All cash offer is the same. And if you're saying you're doing all cash, it's it's not a contingency on buyer getting a loan on that. Okay, loans, a little bit different here in the loans. Everything is the same except for paragraph 3, and that's buyer's loan status, where we talked about that it's a pre-qual, pre-approval, or fully underwritten. So that's the difference here. The other thing that's added is if there's a pre-qual letter, pre-approval letter with the lender, and the seller finds out that the buyer's using a new lender, then the buyer has the right, then the seller has the right to ask the buyer for an updated contact information, and then the seller has the right to contact that lender for the status on what's going on with the loan. Actually, the seller has the right to call the lender to get the status of the loan, whether they've changed or not. So that's in right here, status of the buyer's loan.
Mike, I have a question on that. We see a lot of this happening a whole lot of time where the lenders get changed after we put the offer. Sure. Does that become is in any way becomes a ground for the seller to cancel the contract, or
no?
No.
Yeah. What the seller what it's saying in this contract, if the buyer changes, then the buyer shall deliver an updated contact information within 1 day of seller's request. So the buyer's bound by the agreement.
Okay.
It also says sellers or sellers representative.
Yes.
That'd be us.
Yep. You're talking about for the status, right? Yeah, right here for the status. I'll be honest with you guys, it's no different than what I do right now.
But at least you're legal, now you're authorized to do it.
And that's the whole key with this contract versus yesterday's contract. There are things now in writing that we assumed we could do that now in writing give us the power to do it. So that's what I love about this contract. Our actions aren't changing that much, but it's just spelled out more clearly. Okay, let's paragraph 4 is that FHA or VA. And we talked about within the 17 days that the buyer has to deliver to the seller all the stuff that needs to be fixed. Doesn't ask that the seller to pay for them, or the buyer can fix it, or someone's got to fix it to get that FHA or VA financing. Even if within that time frame, what's added is that within 17 days, even if there are no lender requirements, that the buyer has to tell the seller that. So that's the only difference in here. It says that. Paragraph D is balance of the purchase price, down payment to be deposited with escrow holder per the instructions. And then E is a limit on credit to buyers. That's the same as the old contract, that if there's an agreement to credit the seller, to credit the buyer for closing costs, and the lender only allows a certain amount, that's all that's going to be done. There's no extra money out of escrow that's going to the no extra money outside of escrow that's going to the buyer. The buyer's not owed any additional money than what the limit of the credits are by the lender. And let's move on to paragraph 6, additional financing terms. Verification of down payment and closing costs. There's no difference there. And the loan application, there's no difference in that regard as well. It talks about the buyers pre-qualified or pre-approval. Again, there's no legal definition of what pre-qualification is or what pre-approval is, but whatever they're getting, that's what they're getting. I think as a buyer's agent, we need to really know what we're putting down in the contract, and more importantly, as a seller's agent, to dig a little bit and see what that actually, that pre-qual or pre-approval letter actually means. And I think that's it for today. Let's finish the paragraph in paragraph C, and that basically paragraph C is the buyer stated financing. Basically the seller is relying on what the buyer is telling us that's the loan that they're going to get. Now the thing is, can the buyer change from what he's put in the contract? Yes. Does the seller have to cooperate with the buyer? No. In this new financing. But the one thing that the seller can't do is he can't refuse to close. So in other words, if the buyer is saying that they're going to pay all cash and then they decide to get a loan, the seller can't say, well, I'm not going to close escrow because you told me you were going to pay all cash. It doesn't allow that. What it does allow is that the seller says, I don't need to cooperate with you, Mr. Buyer. However, remember I talked to you earlier about the 17 days, the buyer has the right to get into the property, do their own look through of whatever they want to do. That's how a buyer will get around allowing an appraiser to get in the house by using that paragraph of buyer access to the property in the first 17 days. So the only important thing with the buyer stated financing is that the buyer, if he changes his financing, he better close escrow and better perform, because if he has a loan contingency, it's only on the existing loan that is in the contract, not what the buyer is trying to get. In other words, if the buyer is saying that he's going to get a 60% loan to value loan and then gets rejected for an 80 or 90% loan, he can't use the loan contingency as an excuse to back out and to get his deposit. He's in breach of contract.
You've always suggested that we ask for if someone's going to cancel because they didn't get the loan, you've always suggested that we get verification that it was the same loan, correct?
What I will ask as a listing agent, Renee, is if someone says I can't get the loan, I want the rejection from the underwriter,
Okay,
and the underwriter will have should have everything in there.
okay.
And just a letter from the loan broker isn't good enough for me.
Nor should it be.
I don't think so. I mean, let me rephrase that. I will consult with my seller and tell him that this is what we have, but to guarantee what's really going on, we should get information from the underwriter. Mr. Seller, do you want me to pursue that?
Okay, I have a question.
Yeah.
So you don't have a loan contingency in
Okay.
your purchase contract.
You don't
And-
have a loan contingency. Okay.
No.
Got it.
Pretty standard at this point. But your buyer, we write the contract based on what loan they were looking at. They decided, on day 2 or 3 of the contract, you know what, I want to go with Loan Depot or whoever. And they want to change loan lenders. Now, if we can stick within the time frame parameters, we're good, right? As long as, ultimately,
Well, let's put it this way, Cindy, not to change what you're saying. You're good whether you change lenders or not, as long as you stick within the time frame. You're not good whether you keep the same lender or not if you don't stick within the time frame. So,
what's the last part again? Can you tell me?
bottom line is, seller doesn't care if you change lenders or not. What they care is that you perform, and you perform on the timely basis that you committed to.
Yeah.
So by changing the lender or not changing the lender, seller wants you to perform.
But we don't need to notify the listing agent if they're deciding to change lenders if we don't foresee a delay.
You're not required to notify of the change in lender. You are required per this contract. If the seller requests the information of the lender, then you need to provide the lender's name and number. And usually that will happen when I call the lender on the pre-approval and say, I'm not working on this deal anymore. Then it's going to prompt me to call the buyer's agent and say, who's the lender?
Yeah.
And I need to know who it is because I need to call them.
But there's not any additional paperwork or any permissions that the seller needs to sign off on or whatever, if we have no loan contingency, basically.
No, even if there is a loan contingency, the only requirement is that the seller is entitled to know who the lender is.
Okay, well, and title and the listing agent.
Yeah.
Because they have to get a hold of them, basically, right?
Yep.
Okay, all right, cool.
Okay, all right. We'll close it on paragraph. We'll start tomorrow on paragraph 7. So I think we're in a good spot. Is there any questions at all? Anything in the chat, Renee?
Not that I could see. It looks like you're
Hey.
answering all the questions.
One of the things, Mike, was somebody else going? I guess I spoke at the same time as somebody else was going.
Go, AJ.
Okay, so one of the things that I see that has changed a little bit as I was filling out the form is we used to have to really check off verification of funds, verification of letter of lenders, pre-approval letter and stuff. And now you don't have to do that.
It's the default now. And
Yeah.
instead of yesterday, you would have to check that box at the end of the paragraph.
And a paragraph,
The
yeah.
default now is that you're going to provide it, because basically, do we provide it when we write up the offer these
We
days?
do, yeah.
So they just made it what is commonplace in what we do.
So
that's
it's good. A few less checkoffs to do in writing the
that's the
offer.
default on that.
Yeah.
Yeah.
Just writing this offer, Mike, it's really well organized. It's,
Yeah.
I liked it, yeah, too.
My concern, AJ, is that agents are going to talk to their principals and review the contract and only do the grid and not do the rest of it. And
And
that's,
that was my question is what's your suggestion? Because when I used to go through the contract with them, we would write the information in at the same time on the Zoom or whatever, or review the information, but now we can't do that.
well, you still need to go through the contract like we went through the contract with your client.
Yeah. It's
Uh,
just basically a summary page.
Yeah,
So
I
do
guess-
the whole contract and then do the summary page.
And the summary page puts enough stuff down, but it's not in detail. And you have to go through the nitty gritty a little bit. So
Yeah.
I just, that's I mean, it's a concern, but it was always, it's a concern whether buyer's agents go through any of the contract with a buyer.
Yeah, and
Or
since
the-
we're doing so many offers, as a rule of thumb, Mike, I always on the first offer, I take a lot of time going through each of the paragraphs, and then subsequent offers, at least I ask them, hey, are you comfortable with all the other stuff or not? Yeah.
I would go one step further, AJ. I think good business that takes the pressure off of you when you're writing up your first offer is spend the time with your buyer when there's no property under consideration.
That's true.
Go over the offer with them. You can go over it with them in an hour, 2 hours, 10 hours or whatever. But usually it's an hour of you hit the highlights and do that. And once you do that, you give them a copy of the contract, review the contract, and let's get together and go over questions. Whether you review the contract with them before or after you give them the contract, at least there's no time constraints.
So I have
They're
yeah.
more relaxed. You're not facing a deadline with offers have to be reviewed by 5 o'clock and it's 3 o'clock. And everything in life goes so much easier with that.
Very good suggestion, Mike. So I have a follow-up question for you. What if my buyer says, hey, I'm very familiar with those contracts that you had yesterday or the past contract. Why do I have to spend time doing this new contract?
no,
I still have to do that.
I was more referring it to a client just going over the RPA. If you went over the old RPA, I think you've done 90% of the work already. And then I would just highlight a couple different things, especially highlight the differences like TOPA. That is critical because that's a big mindset change from what we had yesterday to today.
Got it. Okay.
But
Well, the other thing too is if you go through the grid, it has in the grid the reference paragraph in the contract.
except for
as-
that one that's wrong.
Except the one that's wrong. But if you were to say, okay, what are we going to put here? And let's look at what the contract says in more detail. I think that if you were to do it in that way also, that you would be able to cover all the highlights.
Yeah. And AJ, to kind of further that, the sitting down with your client with the purchase agreement, whether you do it with a seller or a buyer, if you did that, you're on the top probably 98% of the real estate industry.
Yes,
and that
absolutely.
and that is really a big difference maker from the rest of the agents that are out there.
Well, I have to thank you, Mike, for that, because with every quarter that you take that class, it becomes very easy to go clause by clause and go over that with them. So that not everybody has that luxury. Not every broker does it. So it's pretty amazing.
And I don't know if I gotta think it helps because I'm a terrible real estate agent. I'm probably the only agent in the world that hates showing property. If I don't have to show property, I would never do it. I hated it from the time I got in the business. And a lot of people, thank God, are not like me. They like doing that. But what I have to differentiate myself with so that I could add some value, I am terrible at colors. I'm terrible at we're envisioning where furniture is going to go. And I pride myself in telling people that I'm the worst guy for that, but I got to do something. So I better do something and show value that I know the contract and I'm gonna protect you, Mr. Buyer, by let's go over this so that you know full well what's going on.
It's amazing how much trust it builds also, Mike, is when you go through, that means you're telling them you're not hiding anything. You are going through everything to tell them that you'll protect them and you're going through the whole thing.
I'm kind of hoping that it builds loyalty, that they're not gonna, and it's happened to me before, but they're not gonna go to the open house and buy direct because they want protection. And if you can instill something, whereas you're differentiating yourself from just opening up the door and saying how lovely the green shag carpeting is, I think buyers want a sense that some buyers want the sense that they want to have someone on their side.
That's a good point. I will remember that, Mike, because you're saying they don't go to the listing agent. It happened to me a couple of weeks ago where they just went and got it from
And
a
you know
listing
what?
agent. Yeah, they will do it still, but
It
at least
still
you
might
know.
happen after investing a couple hours, but I would hope that that we would build some sort of being viewed more as an expert and be able to be viewed differently than how they might be viewing real estate agents as of then. So anyway, everyone has their own way of doing things, but I think that you would be adding a lot more value than most agents outside of our office if you spent the hour or two, an hour, we'll go over the highlights, and I think that would win some loyalty right there. Anything else, guys?
So Mike, if it used to take me with the 10-page contract, I always tell my buyers it's about a 2-hour Zoom to go over the whole contract. Now it's 16 pages, but it's about the same.
Yep.
So would you say that it's going to take a little more time, or do you think it's going to be about the same?
I would think it's about the same.
Even though
Even though there's 16 pages, I think I think the concepts are the same.
Okay.
Anything else? And I think, Cindy, to be honest with you, as you get more familiar with the new contract, it'll get less without having to skip over things.
I hope so, but I mean, I just try and explain everything as much as possible, and then they have questions, and so I just book 2 hours, and usually it's about 2 hours.
The one thing I'm going to leave with is to the next couple days are going to be the times that you're going to see the old contract being presented, and I would like you to consult with your seller in advance, and just to say, in case we get we're having a transition, this is a new and improved real estate contract in the state. There may be an agent or two that might be still using the old one. Do I have your permission, if we do get the old one, that I ask him to rewrite it on the new one? And I think that'll save time. And I think that's the way to go. You, as an individual agent, shouldn't be the one to reject the offer. It should come from your seller, or at least get permission from your seller to do that. And once you have that, then it's clear sailing.
Mike, I know you know the answer to this question. How do we get a recording of this?
Well, to be honest with you, I don't know the answer to this.
I know you don't.
You know what? I'll check with Rob or Chelsea. I think,
okay,
being that it's Bascom generated, we'll get it.
Okay.
We'll get it to Elaine and Rob will have it.
Great. Thank you.
Okay. Anything else? Tomorrow, same bat time, same bat station, 1 o'clock,
Thanks.
right?
Thank you, Mike.
All right,
Thanks,
guys. I'll
Michael.
see you tomorrow. Thanks
Bye.
again.
Bye.
Bye-bye.